So I just turned on the recording, and we'll get kicked off with this first CCAN webinar series, AIA Billing and Commercial Change Order Management. So my name is Dan Derule. I'm one of the founders here at Nullify. I manage the partner program, so I've had the pleasure of working probably with many of you. If you want to contact me, my email will show up at the end of the presentation, but I'm always happy to receive email from advisors, accountants, and answer any questions they may have pertaining to either our product or to the construction area. All right, so today, what are we going to go over? The first thing we're going to try to do is understand what sort of underlines all this AIA billing process, which is actually the contractual line items and the difference between bid line items and the so-called schedule of values. There are actually some pretty important distinctions, and we just want to make sure that we have some of the terminology in place so that as we proceed talking about the G702 and G703, that we're all using the same language. Second, and this is probably what all of you joined for, we want to go over the G702 and G703 AIA documents. That collection of documents is sometimes called an application for payment or a pay rec. I mean, there are many different ways contractors refer to it. But what it is it's a standard invoicing style for much of commercial construction, and it really is the industry standard. Three, we want to go over the change order process between subcontractors and GCs and owners and architects. And this is because it actually has a huge impact on the, especially G703 documents. So it's important that we understand some of the funny things that can come up there. And that obviously is learning objective 4, as you see. And then 5, throughout the presentation, and this is based a lot on our own experience in dealing with customers and dealing with pro advisors and advisors who work with contractors, we have a lot of advisor tips, things that we learned that hopefully you can bring to bear when you work with contractors in your own practice. All right, so here we are with the background items I mentioned, talking about contracts. So there's actually a pretty big difference between bid line items and the contractual SOV, meaning schedule of values. They can be the same, but they're often not. Because what happens is that bids are broken up into the line items requested by an estimator. And the estimator is the person at the GC or the construction manager or the owner's rep, whoever, who says, so I can evaluate your bid correctly, please submit it with this sort of breakdown. And then they'll compare your bid, if you're a subcontractor or GC, against all the others who are bidding against you. And based on how you've broken things down, whether they think you can actually complete it given the price you've quoted, they may award you the job. But those line items are not necessarily what they're going to ask you to bill. And we actually have an example down here below, because what happens is once that bid moves into the contract process, once that is actually accepted and then turned into a contract between you and, say, a GC, or your client, a GC, or your GC client and an owner, it will get broken down into a schedule of values, which is actually what you have to bill. So in this example here, we have a bid line item where I bid kitchens in Tower 1, which would literally be all of the kitchens across all the units in a tower for a fixed price of $1 million. And on the contract, my GC has broken it down so that I will then bill for 1 kitchens, for 2 kitchens, for 3 kitchens, for 4 kitchens. And one of the things about the SOV is it's typically carved up in such a way that it's easy for the GC or for the owner to walk through and verify that you've completed what you've said you've done. So obviously, if you're breaking it down to 4 1 kitchens, 4 2 kitchens, etc., they can send a super or equivalent project manager through the building and say, yes, this contractor has completed 50% of the 4 1 kitchens, 100% of the 4 1 kitchens, etc. All right, so retainage, another important concept in commercial construction. This is the amount of money that's withheld from each invoice until the job is complete. The most common value for this for retainage is 10%. So for example, if you have a $10,000 contract and you're 10% done, you don't actually invoice for $1,000, you invoice for $900, and the last 100 is held back until the end as retainage. Now, this actually can cause all sorts of problems because GCs are notoriously slow at releasing retainage at the end of a job. I mean, any subcontractor who does meaningful amounts of commercial work will complain to you about how long it takes them to get paid on their retainage. So this is actually a very meaningful tip. You as advisors should talk to your commercial sub clients, and many of your contractor clients in the trades or specialty contractors probably do some commercial work, and see if you can get them to negotiate for a reduction in retainage from 10% to 5% at 80% completion. It's actually fairly common, especially for larger contractors. And what it does is it means that there's that there's half as much retainage to release at the end of the job. And obviously, when you're not yet finished, the GC wants you to keep going. So they'll typically pay you quite quickly on that one. So they'll pay you according to the normal payment cycle. And it really does make a nice difference in the cash flow of these contractors. So that's a good advisor tip, definitely one worth writing down. All right, so application for payment due dates. So there are very defined payment cycles that GCs typically have for pay apps. So what you should be aware of is when these pay applications are due, write them down and really keep track of them. Because if you miss it, often you have to wait a whole nother payment cycle to submit your pay app. And going a month without getting paid really isn't fun for anybody, and especially painful, especially if you're one of the cash-intensive trades like concrete, et cetera, that can have significant cash outlays to get materials onto the job site. So for you as an advisor, if you keep track of these pay app due dates for your clients and then send them reminders just a couple days in advance so that they can get all their ducks in a row and get back to you with the information you need to prepare these these AIA documents, that's really going to make a big difference, because missing a pay cycle can be pretty painful. All right, so let's talk about the AIA documents themselves. And the first thing we're going to talk about is what AIA actually means. So AIA is American Institutes of Architects. It's sort of like a guild. And you can see here the original AIA documents actually have the American Institutes of Architects logo at the top left and all this lovely trademark material. Because the AIA actually came up with this and standardized this practice of using these documents. And this first one we're looking at here is the G702 cover sheet, because it actually does a really nice job of making it clear to a GC or clear to an owner what they're getting billed for, as well as where they are within the grand scheme of project billing. So the G702 document we're looking at here is a cover sheet. It just provides summary information, and it's actually less important than the G703, which is the continuation sheet, which is actually where all the action happens. So this is just a very quick summary view. I promise we're going to drill down into these so you can really understand what these documents are and how to prepare them. A couple of quick notes though. So one, it is very, very rare for a subcontractor to be required to use actual AIA documents purchased from the American Institutes of Architects. So you saw up here, we had this lovely fancy logo. That's all trademarked, but it is not possible to copyright a table format. So everything else below here, the general style of the AIA documents can be used by software programs like ours, like in this case I'm referring to Notify, and we can produce AIA style documents as long as we're not putting the AIA logo or making any claims of these being, AIA legitimate bona fide AIA documents. What we produce are AIA formatted documents or AIA style formatted documents. And almost every GC, in fact, almost every government agency will accept them. So a lot of government agencies do require AIA style documents to be submitted for payment. And as long as the formatting is correct, they'll take it. And the same thing is true with GCs. And here's the thing, if your client has been using AIA with like true bona fide purchase from the AIA documents, they're usually wasting about $30 for every AIA document they're producing. And, maybe that's not a huge amount of money, especially for some of your larger clients, but it's unnecessary in most cases. So it's almost always a good cost cut for you to bring to their attention. Okay, so there's also this other case where a lot of GCs will actually send an Excel file that's AIA formatted to a sub and ask them to use that file to bill. And why GCs do this with their own, sort of putting it on their own full letterhead, I'm not really sure. I think it's probably because they assume that most people don't actually have access to AIA spreadsheets or documents. In this day and age, they actually do, but in any case, that practice is very much around. And the funny thing is even those guys often will take any correctly formatted document. So it's usually worth it because you can use a software package like Notify to produce AIA documents very, very quickly. It's usually worth it to ask the person in charge of AP at the GC whether or not they will accept, a document produced by a different package as long as it's correctly formatted, because more often than not they will, and you'll save yourself a lot of time. Okay, so let's actually go through the AIA documents. This is really, I think, what most of you joined for. It's fairly straightforward, but there are definitely a couple of little pitfalls that you should be aware of. So one, this top table is going to be the schedule of values out of the contract. Remember, we were talking about this earlier. These are not your bid line items, although sometimes they may match up. These are the contractual schedule of value line items. And then the change orders are split into a separate table below, but note that the numbering remains consistent. You just keep numbering straight down. You don't start again at 1 with the change orders. 2, on the change orders, only include change orders that are approved, and even then, only include change orders that were approved as of the time of the billing. So if you're billing as of September 30th, let's say October 15th, and a change order is approved on the 10th of October, do not include that change order. You're going to cause reconciliation problems in your GC system. So you can imagine that a lot of, the way this document works is that columns move over time. So for example, work completed in this period will then shift back into work completed previously in the next AIA rec. So as I said in bullet 3 here, anything in column E gets moved to column D and added to what was ever in column D in the next invoice. So here's actually the first little pitfall we have. It's column F, the stored materials. A lot of people, when they first come to these documents, think that materials stored is the value of the materials for that line item, and that's not true. Stored materials are strictly used by contractors to collect for materials stored on site. So you've bought material, you've brought it to the job site, you've stored it there, but you haven't installed it in the work yet. And the reason why this exists in the AIA documents, especially for the trades with huge cash outlays up front, we talked about the concrete guys earlier, guys like that, who spend a lot of money and would have cash flow problems if they couldn't collect on materials stored once it showed up on the job site. So really, it's like a cash flow management tool. And what's supposed to happen is as you complete work, that actually ends up getting incorporated into work completed. So the stored materials goes down, work completed goes up, and usually stored materials are done at cost. So usually your margin gets incorporated finally when it gets incorporated into the work. So if you end a job with any value greater than 0 in this column F, something has gone wrong. That's usually the good rule of thumb. Okay, so last little tip. Sometimes we come across contractors who sort of wake up in the morning and say, I want to get $20,000 for this line item today, and maybe the line item value is $24,327. Who knows? But what that does is that it gives them a very funny % completion. And as you'll remember, when we started this conversation, a big reason this whole document set exists is that so that a GC can send a project manager or a super through and a walkthrough and compare what they say against what you're trying to bill. So if you're billing, 46.78% completion, that's usually a pretty good sign that you're only focused on the amount of money you're trying to collect and not so much on the amount of work you're claiming you completed. So, it's common enough that it may not interfere with your billing, but it's usually a better practice to focus on your actual % completion as opposed to the amount of money you're trying to get paid, with the exception, obviously, of line items where you're trying to bill, where you're trying to collect on materials stored. Okay, so the G702 cover sheet. So most of these values just come straight from the G703, from the continuation sheet that we just went over. And you can see, actually, the AIA document provides this very helpful sort of add these columns notes within the table at the top left. But this is really just summary information, with the exception of the 2 boxes on the right. And the top box on the right is the one for your own attestation, where you say that the information you're submitting is true to the best of your knowledge. There's a notary box, but it's worth noting that a meaningful percentage of the time GCs do not require it to be notarized. That's I would say probably 50-50 in terms of notarization versus not needing to be notarized. The bottom, usually the architect certification, is almost never required by subcontractors. So subs submitting the AIA documents up to their GC for payment almost never have to get the architect to sign it in order for it to be submitted to the owner. That is usually a much bigger deal for the general contractor who does. The only other thing I would note is that the change orders at the bottom left are separated into additions and deductions. So, just be a little bit careful about filling out that box. And the little advisor tip we have here is that since a lot of things in construction, we're not even going into things like lien releases today, but since a lot of things do often need to be notarized, it can actually be very helpful for your construction clients if you're a notary. So, ask your construction clients if they have a notary on staff, and if not, often that's a service that you can add, usually for free, but still increases your value to them and saves them time and effort. Okay, so let's talk about change orders, because this can really introduce some interesting curveballs into the AIA billing process. Okay, so commercial contractors often encounter two different kinds of change. They encounter change tickets, and a change ticket really is just a guy on site, usually, let's say your foreman's on site, along with, the GC's project manager or, a super, and they see, for example, trade damage somewhere, and they want you to fix it quickly. You'll agree to a change ticket with them to do that work, usually small scopes of work, and you'll agree to do it on a time and materials basis. Now, it's important that that be signed. So you need some sort of agreement that work is specified and that you need to get it done. But what happens is that it doesn't actually get billed strictly on a time and materials basis on a standard invoice. What happens is that change ticket is performed, and then an actual formal change order is issued. Usually what happens actually is that the subcontractor will send up their change order saying, look, this took us 5 hours, it's say $90 an hour from our guys. They'll send it up, and the GC will say, okay, or maybe they'll ask for a reduction in the number of hours. Whatever happens, there'll be some back and forth. And then finally, it will be formalized, and it'll be treated as an actual proper change order. And then that value, whatever value finally that change ticket comes to, will become part of the change order values in the bottom table of the AIA G7R. So a change order by itself, usually, you'll skip change tickets and go straight to a change order if we're talking about a meaningful expansion of the scope of work. It's just a formal amendment to the contract that changes the scope of work to be performed. It does have to be signed by both parties, and in some cases, especially if you're working with GCs, probably not a huge deal for you guys, even by the architect. So change orders are a big deal in contracting, as I'm sure many of you know. Specifically around change tickets, it is something that's a big challenge for contractors to manage. If you're working with commercial subs or guys who are doing commercial work, do see if you can help them come up with a process for managing change tickets, since it often is quite painful. So the change order forms themselves have some AIA compliance issues. So there actually is an AIA change order form. I don't think I've come across anybody who actually uses that one. But the important thing is that there are standards from the AIA form that are actually very common in terms of submitting change orders in the commercial construction space. And I've actually pasted in the table that most people expect to see at the bottom here. And really, it's just a breakdown in terms of the contract impact of prior change orders, change orders, and where the overall contract stands. So, as long as you get this table in here, it's generally going to be an AIA compliant form. Another advisor tip, this one's a little bit self-evident, but it's very, very, very important. Make sure that you're keeping track of the signed change orders and when they were signed, because finally you can't bill for things that you can't prove were agreed to by your counterparty. So usually a GC, but maybe an owner or an architect. Okay, so here's the complication we've been mentioning. So let's say, so you're using the AIA documents to bill. The important thing here is when you're setting them up, your continuation sheet has to match whatever the GC has in his system. So it's, you can imagine the reconciliation nightmare if things get off. So here's the thing. If you submit up 3, 4 change orders, and I have here a simple case of, let's say add additional sink to restroom A, add additional toilet to restroom A, install third horsepower pump. Those might all be your own, on your own change order numbering. That might be change order 21, 23, and 24. Now the GC might look at those and say, yeah, these sort of go together. We're going to put these all in our system as subcontractor change order number 42. So I have FCCO-42. Now, here's the problem. I'm sure you guys are anticipating this already. Your own people are going to have no idea what SCCO-42 means. But that doesn't mean that SCCO-42 doesn't matter a lot to you, because if you're not actually putting that on your AIA document, if you're not saying we are 50% of the way through SCCO-42, then your GC is never going to pay you for it. So what happens is you now have a very hard time figuring out what you need to bill for, and yet you have to, because the GC won't pay you, you have to include that actual reference on your pay app. And the trick here, there actually is a nice solution. This is what software can do for you. So for example, what we do in Notify is we use a field we call the GC reference. And what it does is you'll still be able to process the change orders as you understand them. You can still go to your foreman and say, did we install the sink in restroom A? Did we install the toilet? Because you're going to see those when you're going to fill out your AIA documents. But what will happen is if you have matching GC reference fields for each of those change orders you submit, then on the AIA documents, we're going to smush them all together into a single line item that will say SCCO-42 in this case. And that will automate the process of that reconciliation and save you a whole bunch of headaches. All right, so I think that was a pretty good run through the AIA billing process. I'm happy to answer any questions. I hope we covered sort of the major areas, especially related to filling out the documents themselves and some of the funny things that can happen, especially on the continuation sheet, owing to things like change orders and other things that can emerge from your GC. So at this point, I think we can either open up the lines, or let me check and see if my colleague has got any questions. Feel free to put in anything on the chat that you'd like to see answered, and we will go back through it. I do see a demo here asking, or excuse me, a question here asking if we will do a demo today of Notify. No, I wasn't planning on doing a demo, although we certainly could follow up at any time to show you how Notify handles these things. That would actually be a fairly quick demo. We could do a 5 or 10 minute run through on how Notify handles the AIA documents. We also have a video on YouTube, I believe, showing how AIA billing works in Notify. Okay, so I see a question here about materials stored. So I think the most common practice with materials stored is to include, is to add materials stored at the cost of the materials to you. I think that is, at cost is I think the most common practice. I imagine finally, though, it comes down to what your contract says with the GC as to how you may bill for those things. I mean, in theory, the purpose of materials stored is to let you collect on materials you have on site, not necessarily get paid for completed work. I have a question here from Michelle asking, any plans for consolidating work orders into a single PO for price breaks due to quantity or volume? That's an interesting feature question for Notify, but I think maybe I'm not understanding the impact on AIA billing. Yeah, forgive me for skipping that one. Any other questions about the AIA billing process? Okay, Well, I think we got through things pretty quickly, which is great. Again, if you have any questions or comments or would like any further deep dives into Knowify and how we handle these problems, or maybe an opportunity to show off what we do for any of your clients, please feel free to reach out. As always, we are available to answer other questions you might have related to contracting or commercial construction, and specifically as it relates to the operational side and the financial side of the business. So my email is djr@knowify.com. Our phone number at Knowify is 212-233-3230. Thank you very much again for joining us for this webinar, and I hope to see many of you join us at future webinars that we hold for CCAN. So again, thank you for joining us, and I look forward to connecting with you all soon.